While all the attention went to Nvidia on Wednesday after the market closed, we already did an Nvidia earnings review that will be in the top right corner if you missed that. Let's focus on the other two big companies that reported, Snowflake and Salesforce. Two different stock reactions. Snowflake being up, I believe, 10% after the market closed. Salesforce down around 4%. So what exactly happened? Let's discuss all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Don't forget, 12:30 p.m. Eastern every Thursday and Tuesday, I'm going live with Jose to talk about the market, semiconductors, and well, anything else. So stay tuned for that one. And so as always, a quick overview here. So for the quarter, beats across the board. Annual guide was fine as well, although a very small miss here when you look at free cash flow margin. They told us 25%, market was looking for 26%. So okay, but on all, still doing quite well. If you look at free cash flow margin, that has increased 3,380 basis points quarter over quarter, or 20 basis points year over year. And then if you look at the 2 year, that's up 510. So if you zoom out a little bit more, not just the year over year comparison, but if you look at 2 years, I mean, if you look at margins, things are trending in the right direction. Although I know there are some things that should be addressed, especially when you look at SBC as a percentage of revenue, which we're going to do later in this video. So product revenue increased 28% year over year. For the fiscal 25, that has increased by 30%. Net revenue retention rate of 126%. Total customers above 10,000, and that is increasing 19% year over year. Customers with product revenue greater than $1 million increased 27% year over year, so faster than the overall customers, which is always good to hear. Now, if we zoom out and look at what has been happening. So in the last 3 years, total customers have increased by 87%, or grew at a compound annual growth rate of 23.2%. Net revenue retention rate, of course, is coming down, but it's still industry leading at 126%. I thought it would stay at 127 like we've seen the past 2 quarters, but still 126% while managing to grow this quickly is very, very good. Looking at product revenue, that has increased by 27.8%. So growth is decelerating. The dollar amount is going up, but at one point, of course, we will reach that point where the market will ask themselves, well, okay, growth rates continue to come down. What's going on here? Of course, the opposite can happen. Suddenly we see this actually increase. Then looking at total customers with product revenue above $1 million, actually here we are seeing a small reacceleration in growth. In the last quarter, that grew by 25.2%. We're now growing at 27.5%. So this is definitely a positive thing. And they've talked about the bigger customers. We're going to touch on that comment in just a second. But this is one thing I have to address. This is not the fully updated one, but just to give you a big picture here. Stock-based compensation is definitely an issue with this company. They told us that in fiscal 2026, they expect stock-based compensation as a percent of revenue to decrease to approximately 37% from 41%, and will continue to decrease year on year. I mean, okay, that's great to hear that it will continue to decrease year on year, but it's still, still expected to be 37% of revenue in fiscal 2026. That's just very, very big. A couple of extra things here. So remaining performance obligations, or RPO, continues to increase, and we've seen actually a very nice increase last quarter. This part here, the 48%, that's the expected number that they will recognize as revenue in the next 12 months. Then looking at fiscal 26 guidance. So year-over-year product growth of 24%. So here as well, growth is decelerating, but the number is becoming bigger and bigger. Non-GAAP product gross margin of 75%. Operating margin also non-GAAP of 8%, which is better than in fiscal 2025. Non-GAAP adjusted free cash flow margin of 25%. As we've seen, that was a small miss. The market was still expecting that 26% number. Then I would like to touch on 2 comments that were made during the earnings call. One about DeepSeek. So an analyst here was asking about the developments, the DeepSeek and Stargate and Meta's $200 billion project. Said the following: how would you think through the direct and kind of indirect opportunities for Snowflake with that much data in motion? For instance, DeepSeek usage in Cortex, or some of the broader data management or data integration needs as your customers start to tap into those services. And so the long, short answer is this. This is a pretty dynamic space, which seems to change pretty dramatically every 3 months. But in as much as DeepSeek is interesting, I think the work at XAI is doing and Grok 3 and what it is capable of is equally interesting. Then he switches to Snowflake specifically. Our value comes from our customers being able to bring all their data together into one place and drive more and more value with it. What we are doing is building the best products that can take advantage of the data gravity that we have and access to the biggest, best models that are on the planet. Of course, they're working basically with every big cloud player, every model that's available out there, they're working with them. And so he finishes off by saying, I think there is a belief on the part of many, especially the ones that can afford it, that there are more breakthroughs to be had by investing hundreds of billions of dollars. I mean, sadly or not, that's not for us, but I feel very happy about our ability to work with these folks and create value for our customers. Remember, last year, Snowflake was one of the first ones that said, look, GPUs and all of that is great. We've spent enough money. Now it's time to see what the return on investment is going to be on all of that spent. And then the last thing here with regards to Snowflake was a question about there was several large customers that ran out of capacity before their contract ended as the revenue outpaced their contracted bookings. Instead of putting forward the renewal cycle, these accounts are now purchasing as they consume. So there was some question about what happens with these customers right now. Are you in discussions for them to sign a new long-term contract? Yes or no? Management said that they would expect them to sign a contract between 1 to 6 months. Plus, this is also a positive thing, meaning that they signed the contract and they ran out of capacity sooner than expected, which means that their usage is going up faster than expected. This should be seen as a positive thing. And so right now, a quick look here at Snowflake stock. We're at $186 pre-market. The stock will be back up above the 50 and the 20-day moving average, back closer to the previous highs that we've seen last week. So all in all, with Snowflake, they continue to do well what the market didn't think they could do a year or so ago. So great quarter for them, good execution, definitely not the cheapest stock out there. Moving on to Salesforce. So Salesforce quarter was a good one. Revenue missed a tiny bit, but all in all, this is what we get. We got some information from Agentforce and Data Cloud. They said that since October, they closed 5,000 Agentforce deals, including more than 3,000 paid, which means monetization is going well. $800 million in Data Cloud and AI annual recurring revenue. That's up 120% year over year. If we look at help.salesforce.com, Agentforce has handled 380,000 conversations, achieving an 84% resolution rate with only 2% of the requests requiring human escalation. There has been a lot of talk about, can AI actually replace humans? Especially when we talk about customer support. We've seen that with Lemonade, for example, with insurance, with claims. Can AI really solve that? Klarna, the buy now, pay later company, of course, has been using AI to solve a lot of tickets, a lot of claims for a long period of time, longer than others, and they are seeing positive signs. So this is definitely encouraging. Looking at the fiscal year 25 results, fourth quarter revenue of $10 billion. It's a bit less than that, if we're being honest. That's up 8% year over year, inclusive of subscription and support revenue of $9.5 billion. That's up 8% year over year. Current remaining performance obligations is up 9%, so a bit faster than revenue growth. Total remaining performance obligation grew 11% to $63.4 billion. But then if we focus on free cash flow and cash flow from operations, we can see that for the fiscal year 25, operating cash flow was $13.1 billion. That's up 28% year over year. And free cash flow increased 31% year over year to $12.4 billion. So this might not be the super growth story that you are expecting, but it definitely is a free cash flow growth story, which means they can buy back more shares and invest more, pay a bigger dividend eventually as well. Because if we look at guidance, right, total revenue year over year growth for Q1, only 6 to 7%, for the full year 2026, only 7 to 8%. Of course, they might be putting the bar low with them launching more and more products. Maybe they're putting the bar low so they can beat their own expectations. But with Salesforce, of course, the stock itself rebounded quite nicely since the lows of last year. The company is also doing much better. Just look at that free cash flow growth. That's just amazing to see. But yes, you're not going to get that 20% year-over-year growth for revenue or things like that. But don't forget that the dollar amount here is, of course, much larger than a Snowflake, for example. But of course, if we look at the growth rates for total revenue, that has been coming down for quite a while. So this is definitely something that the market is like, actually, what's going on here? Why aren't we seeing revenue growth reaccelerating? They, of course, generate revenue through different segments: sales revenue, service, platform, integration, analytics, marketing and commerce, and then professional services and others. That's this smaller part right here. Most of those segments, since, well, January quarter of 2022, so 3 years ago, most of those segments have grown at a compound annual growth rate of 10% on average, or maybe a little bit more. So it's definitely a steady grower that is becoming more and more profitable. What we did see reaccelerate this quarter is remaining performance obligations, or RPO. It went from 9.9% growth 2 quarters ago to 11.4% year-over-year growth in the reported quarter last night. And so here, if we look at the stock right now, it seems like we're going to go under the 200-day moving average, which sits bang on the $300 mark. Now, of course, throughout the day, a lot of things can change. It would not surprise me if we're seeing this butt up a little bit and see that candle go back up above the 200-day moving average, because it still is a very good company. It's still performing okay. I mean, if you look at revenue growth, then okay, it might not be the sexiest name out there. But if you look at free cash flow growth, then yes, then we're talking about something different here. So it really depends what type of investor you are. I think the market will buy it up, of course, depending on what happens throughout the day. We've seen with NVIDIA yesterday an amazing quarter, good comments on guidance, although the microphone issue still exists, which is unacceptable. And the stock is basically flat to down. So this is the story of the earnings season, right? Some companies with good reports go down, some other companies with not so good reports go up. And then, yeah, you have the exceptions of Snowflake, for example. Good quarter, stock continues to go up. But yeah, this is basically the difference here. Snowflake rapidly growing and improving. Salesforce growing. Free cash flow is growing quite quickly, but maybe the market wanted a little bit more. So that's all I have to say in this video. 2 in 1. You're very welcome. If you enjoy this type of videos, hit all the buttons. We really appreciate that. And I'll see you all in the next one. Bye-bye.